Larry Hite and Richard Dennis, two of the most popular system traders of all time. They both made hundreds of millions of dollars trading continuation trading strategies. That must mean they're on to something, right? So in today's video, we are going to be covering continuation strategies. Larry Hite is the co-founder of the hedge fund named Mint. In Mint's first year, they returned over 60% to their investors, and Mint ended up becoming the first ever hedge fund with over $1 billion in their management. Richard Dennis famously borrowed $1,600 and was able to turn it into over $350 million using a continuation trade system. He actually took a group of 14 individuals, most of whom had no experience with trading the stock market, and he turned them all into millionaires by teaching them his trade system. They called themselves the Turtle Traders, and we're going to cover multiple different strategies in today's video, but the Turtle Trader strategy I currently have built and is running on the chart behind me. So let's start with this one. You of course see two different colored lines plotted on this chart, this cyan line and this salmon colored line. That represents the highest high point out of the last 20 bars and the lowest low value out of the last 20 bars. As with the turtle strategy, this determines both your entrance and your profit exit. We are looking to enter the trade when the highest high value out of the last 20 bars is closed above. Then we let that trade play out. We let the move continue, obviously as being a continuation trading strategy, until it reverses, and we signal that reversal by when a candle closes below the lowest low value out of the last 20 bars. The very important part of this strategy is its stop loss reasoning, not only for the obvious reason of capital preservation, but also because this determines our position size. The stop loss of the strategy is if the current bar closes below our entry price minus the average true range value, which I have plotted here as this line. So on this entrance, the ATR value is 9.2, if you can make out that little number here. So we enter the trade when it breaks above the highest high out of the last 20 bars at about 207.5. The next candle ends up closing down at 194.5, obviously being more than a 9.2 point drop from our entrance, so the strategy gets stopped out of the trade. Now, what's important about this number as it pertains to trade size is that Richard Dennis taught his students that you should only risk around 2% of your value that you're putting into the strategy per trade. That means that the math should be done. Hey, if I enter, my stop loss is 9.2 points down. So what is 2% of my value in risk? What is that divided by the ATR? In my instance, I have my strategy ran up on a $25,000 position size for this strategy. Take 2% of that. That means I'm willing to risk around $500 per trade. So at a 9.2 point drop, that comes out to buying 54 shares to risk around $500 if that drop were to occur, as obviously it did here. Now, I have included a catch in my custom created code here so that also the position size obviously can't be larger than what you have the settings set to of the strategy for the position size you would like to enter. Once again, in my instance, being $25,000. So as I drill down, I'm now in the 5-minute chart of SPY. 5-minute candles have a smaller range than daily candles. So the ATR on this candle at this entrance is only 77 cents. That means I can buy something like, if I do the math, I can buy something like 650 shares and risk $500. But obviously, I can't afford 650 shares of a $580 stock if I want to take a $25,000 position. That would be a huge, way larger number than 25,000. So I also have a catch. If that share size would be greater than 25,000, then obviously just limit it to taking a $25,000 position, which at about 580 comes out to 43 shares. Now you'll notice something else while running this strategy on your chart, and that is these two add orders. Richard Dennis was a big believer in adding to winning positions. So you may have noticed here when I open my edit studies modal, I'm actually running 3 different strategy codes. That is because I have a turtle add and a turtle add 2 code running. That first add triggers at our entry price plus ATR value. So we're still making use of the same value that we utilize for the stop loss. That limits the number of rules we need, that keeps the confusion of the strategy down. And in our case, when we enter the stock, the ATR is at 5.3. We enter this trade just shy of 441. We end up entering the add at 449. You get a pretty big gap up here, obviously larger than 5 points up above our initial entrance. That is our first add order. Second add order, very much similar, whatever, takes the entry price plus ATR multiplied by 2. So once again, the ATR at our entrance was at about 5.1, so we are looking for a 10.2 increase from our entry price to the add. We end up adding around 455. Remember, our entrance was just shy of 442. That is an over 10.3, 10.2 point increase. There's our second add. Once again, once you get in that full position, you then let it ride until you get that stop, or not even stop, that profit lock when the close breaks below the lowest low value out of the last 20 bars. If you are at all interested in any of the strategies you see shown in today's video, they, along with over 80 other codes, are available for easy import on my website, daytradingstrategies.net. Link in the description down below. The next continuation strategy we'll cover in today's video is one of my own custom created strategies. I call this my runner's swing trade strategy, and it also makes use of the ATR indicator. However, it also adds another indicator that you see plotted here named percent change. And I change one of the settings in this percent change study to open price rather than closing price. So what this is doing is it is showing you the percent difference in the price of today's candles open from the opening price of 14 candles ago. And we utilize this percent change indicator for 2 reasons. First and most importantly, it is what we use to objectify when we should enter a stock. I make use of this indicator to objectify when a stock has been strong for multiple days, meaning, hey, this thing has maybe a higher likelihood to continue than other setups might. So our entrance condition is when the percent change indicator has been greater than 5 for 3 consecutive bars. So when we enter on this candle here, we take a look back at the previous 3 bars. We've got a percent change indicator of 8.4, of 8, and of 5.7. So when this stock begins to make this sharper move up here, moving that percent change over the value of 5 for 3 consecutive days, we get in and we expect a higher likelihood than normal of continuation. Now that you know how to enter trades, let's also now make note of the 2 lines that are also plotted on this chart. Much like the previous strategy code, there is a cyan line and there is a salmon colored line, and also, much like the previous strategy code, both of these lines are based on the ATR value, and one of them is our stop loss, being the salmon colored line, and one of them is our profit take, being the cyan colored line. What the salmon colored line represents is our entry price minus the ATR value times 1.5. So when we enter this trade, the ATR value is at 4.8. We end up entering this trade right around 450.7. And this stop loss line is right at around 442. So I take it that 4.8 times 1.5, that math must add up there. The computer's doing it, the computer's not wrong. Next, the cyan colored line. This is based off of the previous bar closing price minus ATR times 2.5. So as you'll notice, since we based our salmon colored line or our stop loss off of the entry price, it stays pretty flat. It adjusts because the ATR value adjusts, but since we are basing our profit take line off of the previous bar close, it pretty well follows the chart. And then when this stock hits this line, it ends up getting out of the trade. But remember, I said that there are two use cases for this percent change indicator. And the second use case is also a profit exit, because not always will you get a volatile move enough down that this close minus ATR times 2.5 gets hit. And what you don't want to happen in a strategy like this is you get in a trade, it makes a big run up, and then it just sort of slowly runs all the way back down. Right? This sort of cyan colored line is our volatility check. Hey, if it makes a sharp move down, hurry up and get out of this stock as soon as it touches this value. However, also, you see in this trade, we end up making just over 26%, which is awesome, and we end up exiting before this line is hit. And we exit because the percent change value based on the opening price is less than -10 on this bar. When the percent change goes to less than -10, meaning this bar opened 10% or more lower than the bar opened 14 bars ago, we will also get out of the trade and lock in our profit there. And just because I kind of want to show it off, I have also built a custom scanner built around this strategy. This scanner will show you any stock that is currently over 5% on the percent change based on open indicator for the last 3 bars. Basically, this is just a great scanner to see stocks that are currently strong in the market right now and set up for potential continuation. It's actually the perfect time to transition into a conversation about scanners. I don't know if you all have noticed, you probably have, the two strategies we've covered so far in today's video have both been swing trading strategies, meaning we are trading on the daily chart. Next, we're going to cover a day trading strategy. And in order to find the right kind of stocks that are set up for potential continuation intraday like that, you need to have a good daily scanner set up. I do. This is called my runner scanner. I'll actually show you the full thing here. What it's looking at on the daily chart, remember, even though this is an intraday strategy, we're going to actually place our trades on the 5-minute chart, but we're going to scan the daily chart. We are looking for that percent change based on open to be above 30. We are looking for heavy volume, either from yesterday or the average over the last 14 days. And we are looking for yesterday's high to be higher than the highest point of the 10 previous bars before it. So essentially a stock that's very strong on very heavy volume, currently breaking into all-time highs, or at least recent local highs, right? If I come back to our VRME chart, as you can see here on our watch list, this is the daily chart, and as you can see here from this percent change indicator, it has been above 30 for a while now, and it's had a handful of days in which the high is breaking above recent local highs. So if I hop down into the 5-minute chart here, you will see that the strategy, the day trading strategy we're about to cover, is running. It has been trading the last 5, 6, 7 days on this thing, and it's been doing pretty dang well. Before I give you exactly what this strategy is doing, I want you to make note of the fact that for the most part, it only takes one trade a day. This is a continuation strategy, so just like the swing trading strategies we covered, it is looking to buy strength, which is why we built that scanner to scan for very strong stocks on the daily. Then it is looking to hold that strength for as long as possible. Why this is important is because this strategy will work very nicely for anyone with less than a $25,000 account. Anyone that may be still under the pattern day trader rule, where obviously you can't place a lot of day trades. So this strategy only places one a day. It can work under the PDT rule. The strategy itself is actually very simple. The complicated part is getting the scanner set up. But once you have that set up, as long as the stock is on the scanner, so as long as it aligns with those rules of our scan, which I have also built into the code itself so that the code will only take trades on stocks that are also appearing on the scanner. As long as all that is true, the only intraday entrance condition for this strategy is that the stock must be trading above where it opened on the day, which is what this cyan line on the chart represents. So the stock must be showing some sort of intraday strength alongside of its daily strength. You'll actually notice on the trade that this strategy has entered today, it didn't enter right at open because this stock actually opened pretty weak. It actually came down and filled this gap just about pretty nicely. Then once it started to make its move up, once it started to prove intraday strength and it got above today's open, the strategy entered at 363 and it is riding this thing. I mean, it was up over 26%, still even on this dip, up over 16% intraday. And I'll even show you another example here. You've got a stock on the scanner, ERNA. It's on the scanner because I made a huge heavy volume move yesterday. But, and as what happens a lot of times with these stocks that make those huge moves, it's just kind of sold it all off and been really weak today. That's why we have that intraday catch of, hey, this thing must be above its open. It must be proving some kind of strength intraday as well before we begin to trust it for continuation. The exit conditions for the strategy, also very simple. The profit lock exit is simply end of day. The goal here is to hold the trade and let it be strong all day long. The stop loss, and it's not even always a loss. You'll notice in this case, we still ended up making just over 9% in the trade. I mean, that kind of stinks because it did rocket up over 100%, but unfortunately, this was one of those ugly straight up, straight down days. Didn't really provide us the nice all day continuation that we look for, but that's okay. We still made 9%. You wouldn't be super angry about locking in 9%, I don't think. And the reason why we exited the trade here is because of now this bottom indicator I have turned on, which is the RSI, or relative strength index. If the RSI for a specific bar, for the bar that we're looking at, closes below 40, we will end up getting stopped out of the trade there. There are going to be people that just heard me explain that stop loss strategy and they're going to say, well, Trey, a strategy simply cannot go from being up over 100% to only locking in 9% of profit. This strategy sucks. Couple of things. One, feel free to adjust the strategy. If you want to adjust the strategy, I actually have built something I call my stall exit. And if I go ahead and add this to the strategy, it should see some exits. Yes, you now exit after this kind of initial huge move up here, if I can draw this line, and end up locking in 90% of profits. If that's something you want to set up, feel free to do that. I have the strategy created to align with my trading goals. And my trading goal with a strategy like this is to hit absolute nuclear home runs. I only need to hit a couple of these a year to make this strategy extremely profitable. This happened in October when stock ticker DRUG went mental. This strategy captured just about 1,300% profits on this move. And this is why I look to hold all day. Once again, moves like this are going to happen a couple of times a year. And if I can run a strategy to capture them, I am extremely happy with that. And let me catch someone right there. Someone just saw me talk about how this strategy made 1,300%. And they're like, oh my God, I need this strategy. I need to start trading it now. Want to point out a couple of things. One, this is extremely abnormal. These are very, very rare occasions where you're going to get this kind of continuation. Usually your good trades are like 20 to 30% with a strategy like this. Also, the strategy has a very low win rate. I win about 30% of the trades I take with this strategy. Continuation trading in general has a lower win rate. The idea is that you are targeting a much higher risk to reward so that over time you are still profitable. Just know that when trading continuation strategies, and especially one like this, you're going to lose more than you win, and moves like this are very abnormal. The idea is just that you only need to capture really one to make your year, right? I've shown you all a lot today, right? You've gotten a chance to see 3 custom-built strategies. You've gotten a chance to look at my custom backtesting study that shows you the statistics of said strategy. Along the way, you've gotten to see 2 of my custom-built scanners. Well, everything you've seen today, along with over 80 plus other codes, are all available for easy import over on my website, daytradingstrategies.net. You're going to click into our codes. This is where you're going to sign up. And once you sign up, you're going to get access to everything. There's no like further payments for specific codes after that. You sign up, you get access to all 80 plus coded strategies, scanners, studies, etc. And a really, really great part about ThinkorSwim is that they provide you with this share link. So every single code on the website will have a URL like this. All you need to do is copy that URL back within your ThinkorSwim, set up in the top right, open shared item, paste, preview, and import. In about 5 seconds and 4 mouse clicks, you can have any of my custom codes imported onto your ThinkorSwim, and whether it's a study, strategy, or scanner, you simply go to such, you apply it to your chart, and now you have my custom code running on your chart. So head on over to the website. It'll be linked in the description down below. Feel free to read the reviews, see if it's something that could work for you, and then head on in and check out the price and decide if it's something that may be a positive return on investment for you. Can these codes help you make an extra $35 a month? I'm not allowed to answer that question for you, but if the answer is yes, then the decision to sign up becomes simple. I have it set up as a membership because I am always adding and updating new codes to the website. Of course, you can very easily cancel at any time with just 3 mouse clicks under the My Account tab. So don't worry about being locked in or anything like that. So once again, check it out, read the reviews, decide if it's something that's a good ROI for you, sign up, and become a better trader today. Hit like if you learned something, hit subscribe if you would like to continue learning, and with all that being said, I'll catch you all in the next one.